I feel I'm developing a terrible reputation as someone who forces people to do things they don't want to do. I'm very grateful that you've accommodated my pushing to get you back in the room, but you'll thank me when the conference doesn't finish at 11:45 tonight. So thank you for coming back as quickly as you have. As I said before, this is a panel about doing things, and I think it's one of the critically important conversations we're going to be having in the short, medium, and long term. So I think very different views, very different products. I look forward to Effie really keeping a tight rein on all these people who are doing things, who would happily, I imagine, talk about themselves for a long, long period of time. They've all got a lot to say, so I welcome you up, Effie, and then you can start talking about the use cases in the blockchain sector.
Thanks, Steve. Whilst everyone takes their seat, I'll do some little introductions. Over to the left there, we have Laszlo. Laszlo has been with KPMG for quite a while now, and I'm learning all these interesting things about KPMG and about how they have a partnership model, and they don't necessarily get paid by KPMG as an employer. So that's something new that I learned today. Howard is the Chief Innovation Officer at NAB, having been involved in innovating various services and products for the NAB. We're going to hear about what the topic is today, blockchain in action, and I'm really keen for you to hear about something different to crypto and financial markets and superannuation. So we're going to hear something very interesting about some things related to carbon. And Alex has been founding investment firms for a number of years now, and currently is the founder and CEO of Betashares ETFs. And we'll talk a little bit about some of the interesting funds that he's been investing in, and some of the popular ones that we see within the climate sort of space and in the carbon space. So I might start with you, Howard, because I did allude to this very interesting use of blockchain. As I alluded to, it's not just about crypto assets. It's about something we spoke about earlier, about trust, about certifying information on the blockchain. And the blockchain has a very good use for carbon trading.
Sure. So I'll come to that in a minute, Effie. I think the theme of today has been largely about when's the mainstream moment, and I think from a bank perspective, there's probably the mainstream moment happens when we're genuinely solving customer problems and we're creating new market opportunities. And I think that's definitely the case. So I would call that, the banks are starting to have a mainstream blockchain moment. And I think I'm more focused on the kind of corporate and institutional banking end of banking, because that's actually where there's a lot of high friction, high complexity, multiple intermediary sort of processes in banking. And so there we can solve some genuine customer problems, or we can create some new market opportunities. And I guess that's where the carbon one comes in. So can maybe mention later, some of the other things we're doing. But if I take carbon as one example, we've collaborated with 6 other banks globally in North America, South America, Asia, and Europe to basically create a carbon settlement platform with help from Consensus, and Joe spoke earlier. But that for us is a great example of a high friction opportunity where we can create a new market opportunity for our clients, because the trading of carbon credits and the authenticity of those, the transparency of those, we do believe that there's a great opportunity, for the use of blockchain for that, which is why we built the technology that way. We're growing that fast. We've executed the first real trades. The challenge with that is also making sure we can create a digital cash component so that we can fully settle both sides of the trade on the chain, and we're working hard at that. And so, sort of the stable coin component to make sure that both parts of the transaction can all be on chain is super important, and that's another exciting development we're working on at the moment as well.
And that's right here, right now. So this is blockchain in action right now, and it has been for a while.
Yeah, so we have been live with that platform, but actually my ambition is we're not really going to consider it fully operational till we've got the digital cash leg sorted. So yes, we've done trades, but we've had to settle partly in fiat. So yeah, for me, the big breakthrough will be later this year when we have a stable coin and we can actually do the whole thing on chain.
Great, thanks, Howard. And Laszlo, picking up on some of the points about certifying those carbon credits, you were talking to me about the application in construction and in agribusiness. Did you want to elaborate on that and pick up some of the carbon element?
Well, imagine Howard's use case where he wants to create some carbon credits and offsets on the emission of a building. How would you do that? Because the building has lots of materials coming from all over the world, built by lots of organizations, then sold and funded by banks, insured by someone. This is the use case where a distributed environment comes quite handy, and a distributed technology is actually paramount to deliver on these kind of complex, multi-party and multi-sided use cases. That's where we see, and collaboration with ASX earlier mentioned, we developing these type of platforms where a multi-sided marketplace with multiple organizations, globally represented organizations, can trust each other because of shared identity or some kind of onboarding process, can collaborate on tokenized assets, regardless if that's a piece of aluminium going into a frame or a slab of concrete being deployed on the building, and ultimately calculated into, let's call it an embodied carbon index in the end, that someone like Howard's business can say, well, I can look at that accumulated emission and I can offset it with my friends and other collaborators globally in such a way that I offset and I trust that I do the right thing at the right level with parties that I can recognize. And this new environment, these multi-sided collaboration platforms are the use cases that we not just being live with, but actually scaling globally. Because what is interesting about these use cases, they are not one asset in Australia that is truly Australian. Think about any building, most of those materials are coming from overseas. Think about a piece of meat that we export to Taiwan or China or UK. It's going through a whole lot of intermediaries. This is the opportunity that we talked about earlier, and also Senator Hugh mentioned earlier, that if you really, really want to put blockchain technology and deploy it in anger, you need this kind of multi-sided marketplace. And we investing under KPMG Origins in these kind of platforms. Not alone, no one can do it alone in my opinion. It's a collaboration both on tech, on governance, as well as on products.
And also on money, which brings us to Alex, and that is about the funds that people are interested in investing in, and in particular ones that relate to, climate and carbon emissions and greenhouse gases and all of those sorts of good things. I see that there are a number on Betashares that have rising popularity.
Yeah, look, I think overall investor interest is definitely to continue putting money behind those sorts of exposures. I think for me in particular, the one area of interest is transferability of assets. We started the business just over a decade ago, really trying to remove friction in transfer of baskets, basically of shares and fixed income assets and currencies and commodities. And I think what we are observing now is that blockchain has a lot of potential to continue pushing the boundary and continue removing friction around transferability of a number of assets which have not yet been tackled by traditional finance, basically. And one example I would cite is term deposits. I think term deposits is a really interesting space. So obviously a huge space in terms of asset base, both in Australia and globally, and you might have a view on that, obviously, being from a bank. I think the banks are very incentivized now with regulation to raise longer-term funding, and APS 210 and a whole lot of other regulations around liquidity management mean that that longer-term funding is good. People are not allowed to break, for example, the term deposit, but at the same time, term deposit is not able to be transferred from one customer to the next. So one of the things that we're thinking about as a potential use case, for instance, is there a way to create, sort of obviously a system of transfer on blockchain, which doesn't, which enables the bank to maintain that long-term funding, but at the same time enable investors to receive a much better outcome, in terms of their holdings of cash. And there's a lot of other examples, basically. But to me, what's really fascinating about this conversation and the day's proceedings is that there's really a lot of people with lots of ideas which are becoming a lot more tangible than ever before.
And of course, you raise your term deposit idea in front of Howard, who is the Chief Innovation Officer. So I think that was a little bit strategic there.
I'm not that smart.
May I comment to that, Effie? Because what is interesting in Alex's comment is this emergence around two concepts, the tokenized identity, which we heard about earlier, and tokenized assets. It sort of moves the conversation from delivery versus payment to some extent, and which we heard the payment is slow and has to be cleared and is T+2, etc., into delivery versus delivery. Both assets are cleared, therefore can be atomically exchanged. And this is not just in the crypto world where you're obviously saying I'm transferring my Bitcoin to someone else, but how if I'm transferring my fractional real estate ownership to someone else that actually updates the registry? I think these are the interesting use cases where suddenly the technology will start to deliver liquidity premiums in highly illiquid asset classes like real estate, bringing maybe 30 to 40% liquidity premium to a market that will greatly benefit for something like this and can be offset based on carbon and trust between the participants.
I just want to touch on something that was mentioned earlier about, the high gas mining fees of ETH and all of that sort of side of it. But we're talking about blockchain technologies that are being used to trade carbon emissions trading. So do we see any discrepancy in that thinking of we're using the blockchain, but for carbon trading emissions? Howard, if you want to touch on that. Oh, sorry, maybe Laszlo, maybe. Yeah.
Well, I mean, it's two separate things here. There's one which is just a debunking of the technology itself. So, that's a common kind of, I'm not the only person in this room that would have had that question about the environmental impact. So we've done a lot of education with our board and our, what's changing. Obviously, we heard from Joe earlier today talking about the 99.5% reduction in the Ethereum kind of environmental impact. So it's really for me on that piece, it's just debunking and getting the right understanding of what's actually happening moving forward with the technology. And then, so there's no real sort of irony to me. For me, the carbon use case is just first at the moment on a long stack rank of use cases that we're progressing. And the beauty of being the Chief Innovation Officer and also having our NAB Ventures Fund report to me is there's no shortage of people with ideas, and Alex has just added another one into the mix. I think, I am very focused though on the corporate and institutional use cases, because that's where we do make life very hard for our customers at times, and we can see massive opportunities. So I'll start getting into arcane banking speak in a minute, but certainly, the tokenization of other securities, bonds, repo transactions where you have to post collateral all the way through the process because people don't trust each other. There's no transparency sort of in intermediate steps of the process. Like blockchain is a perfect solution for that. So, but the good thing is there is a lot of a longer list of use cases as well. But for us, it's about picking off and actively building. We've got the carbon piece live, but we've got plenty of other important use cases where we can make it better for our customers.
In a corporate world, there's a big difference between permissionless distribution versus permissioned distribution, and also the main value propositions of other characteristics of blockchain technology, such as immutability, because you can achieve immutability with permissioned and permissionless networks. And in a corporate sense, sometimes organizations prefer to be permissioned, distributed in that sense, full transparency around transactions, but also some degree of privacy that has to come in play. And I think the confusion, no week passes by that are not being asked of, is your blockchain consumes gazillion terawatts of electricity? And said no, because otherwise ASX will be bankrupt in, in operating their platform. What they do is a different way of reaching Byzantine full tolerance, right? There are other ways of achieving exactly the same outcome if you're reducing your use case for specific assets, specific players. Players actually value that level of knowledge that they are dealing with another party who've been identified. So they are permissioned to be in that space. And I think that knowledge, suddenly one realizes with boards and senior stakeholders that this is not about consuming, 9 terawatts of whatever energy is used today. It is not relevant anymore. And I think that changes the game, because then you start focusing on the use cases rather than the technology.
Only because we're almost running out of time. Indulge me one question. You talked very strongly about ecosystems and teamwork, and then you talked about the introduction of a stable coin to enable the actual real live use of the blockchain platform. One of the questions that I have is there a place for stable coins as well as CBDCs? I need to get that right because, not dealing in the cannabis space here. CBDCs for the execution of your fiat out and the fiat capabilities within the platform. So is there a place for stablecoin as well as CBDCs?
Well, I think you need one of the two. I mean, for a lot of those corporate institutional use cases, the main thing is to have a stable digital currency for the cash leg. It doesn't matter whether it's a CBDC or a stablecoin.
Great.
I think the stablecoins enables a whole new paradigm shift for the corporate, because regardless if those stablecoins are fully or partially collateralized, they open up elements of automating clearing and settlement, actually completely removing clearing and automating settlement. So if you're two parties transacting and they both can recognize an asset that's fully cleared, then it's just a matter of timing on when they want to settle. And this is actually opens up opportunities in a traditional sense, like in a stock market where today is T+2, but it's not T+2 because I don't know how to clear my real-world cash, but it's some kind of opportunity. I don't want to settle faster because I'm expecting some other liquidity. Therefore, I might actually pay or choose a micro loan for those 2 days to settle my trade, which becomes a choice.
Maybe can I just say, harking back to the opening theme of the day and Senator Bragg, Australian banks are in an interesting position with their much stronger credit rating than just about all banks globally. We have 4 of the 10 or so strongest banks in the world. So there's an interesting role for the Australian ecosystem here on the global stage. If we can use the strengths of the bank versus the way stable coins could have to be managed in other countries.
You mean, sorry, can I bite in with a question?
Absolutely,
You mean an opportunity for Aussie banks to take advantage of their strong credit ratings and become kind of the de facto global issuers of stable coins in different currencies?
That's definitely hypothetically possible.
Right. And would that be any different, like to term deposits or cash raising at the moment? I'm curious.
Not going to comment on that one.
But you can imagine other use cases, Alex, where you think about remittance, which is a classic or one of the best use cases of stable coins, where you think about Southeastern countries where this is a large portion of the GDP, stable coins or let's say, fiat collateral stablecoins can actually enable and replace margin erosion, which is currently running around maybe between 8 to 12% for example, Philippines. That's $33 billion a year transactions going through those remittances that can be fully automated with stablecoins, removing that margin erosion and fully automating transactions with no, or literally almost no fees from any country. Those are the interesting use cases.
That's pretty cool.
Absolutely. Are you going to share any tips for us on any of the funds that we should be looking at closely?
Definitely not.
Yeah, no. Okay, beautiful. All right, I haven't been hurried up, so that's a bit exciting, but thank you very much to our panellists, Laszlo, Howard, Alex. Thanks for keeping us all excited at the end of the day with what's the use, blockchain in action. Thank you.